With exercise 5-4 in Wiley Plus, what you're going to be doing for Part A and Part B is doing the same company transaction, but we're going to be looking at it from both perspective points. So we're going to look at it from this Tuzon company and from the Epps company. The Tuzon company is the purchaser, and the Epps company is the seller. So we're going to do it first from, it says here in Part A, from the Tuzon company. And how they do things is a little different than how we do it in class. How they're going to do it is they're going to buy the item, and they're going to tell us the FOB shipping point, which tells me that it's free on board all the way until it gets to UPS or whoever does the shipping. And then the customer has to pay for it until it gets to their house. So this tells me that the customer is the one having to pay the shipping. But different than how we do it in class, the customer is actually going to pay the shipper the next day, as you can see here. The sale took place on the 10th, and typically what really happens in the real world is the seller gets charged the fee, and then the seller tacks that cost on to the buyer. But in this case, the buyer actually is going to pay the shipping company. So what we're going to do to start off here on June 10th is to show that us as Tuzon, we're buying, and they tell us here what we're buying. We're buying merchandise. So merchandise in a business company is inventory. And our inventory right now costs $83.50. That's all we know. We don't know the shipping cost. There, of course, would not be sales tax because this is going from a retailer, from a warehouse to like a retailer. So no sales tax because there's no end party yet. Tuzon is not definitely the end user. And it tells us here we have terms, so that means we bought it on account. So we bought inventory. The debit question is, what did I get? I got inventory. The credit question being, how did I get it? Well, I got it on account. So I owe Epps Company $83.50. Come down here to June 11th is when we actually paid for the shipping. Now, if you remember back to the lecture, the shipping is part of the cost that gets the item to my store. And then the rule is any costs that get the item to my store gets included in that item. So my inventory didn't really cost me $83.50. It now cost me $83.50 plus $560 because I'm tacking on $560 of this freight cost, and it goes right into the inventory. So that inventory's value just went up to $89.10 if you do the adding. And it tells me here that I actually paid the freight cost, so I'm going to go ahead and credit cash by $560. Now the next date that I have option is the 12th, and it tells me on the 12th that I returned damaged goods that were valued at $350, and I returned it, and it was taken off of my bill, basically. So what did I get is my debit question. I got a reduction on what I owe Epps Company. I owed them $83.50, but now I owe them $350 less, so I only owe them $8,000. And why do I owe them less money is the credit question, because I got rid of some of my inventory. Notice we didn't have to do anything with the fair value of those goods returned. That's going to be later on in Part B when I actually have to show goods coming back to the store. Not only will I have a sales return, but I have the goods coming back as well. Now on the 19th, we go ahead and pay our bill. Tuzon does to the Epps Company. So what I got to do is let's go back up here for a second. It says the terms are 210 net 30. Remember, the first number is your percent off. The second number is the number of days you have to pay it off to get that discount. So we did pay it in 10 days. We actually paid it in 9. So we're going to get a 2% discount on what we owe the Epps Company. Now notice here, we owe the Epps Company $83.50, but we had a return of $350. So really, we only owe them $8,000. So I want to take 2% of $8,000 to determine how much of a discount I'm going to receive. 2% of 8,000 is $160. So let's start doing the journal entry. When I pay off my bill, what is it that I'm getting? I'm getting a reduction of my accounts payable. I no longer owe the X company $8,000 anymore. I want to take it completely off. Why did I get a reduction? That's my credit question. Why did I get whatever it was, in this case a reduction to my bill? Because I made a payment. So I'm going to credit my cash, but not for $8,000 because I got a discount. I got a discount of 2%, which is $160. So 160 off 8,000 would be, we're leaving with $78.40. And then the key part of this one is showing, well, where does that discount go? And when I'm the buyer, I do not want to call it a sales discount because I didn't make a sale. I'm the buyer. And when I'm the buyer, I want to actually credit whatever it is that I bought. I want to reduce the amount of inventory by that 160. Because right now on my inventory books, if I would add up the $83.50 plus the $560 minus what I returned, I would have too much still value because I got that extra discount. So we can go ahead and submit, and we're going to look at it from the seller's point of view. So now we are Epps Company. So on June 10th, when you're Epps Company, instead of getting inventory, we are now selling our inventory. So we ask ourselves, what did Epps get when they made a sale? Well, you usually only get one of two things when you make a sale. You either get money or you get the promise of money in the near future. And that's what we're getting here as Epps Company. They're getting promise to be paid in the near future of $83.50. That was the same that what the Tucson company owed. And I asked myself, why am I going to get paid $83.50 later? Because I made a sale. I had a sales revenue of $83.50. Now, when you're the seller, you can't just stop after recording a sale like we used to do with the service business. We now have to show a reduction of our inventory. We sold it for $83.50, but what did it cost us originally to buy that goods that I sold for $83.50? And that's where this comes into play right here in Part B. It tells me the goods that I bought and that I sold on June 10th cost me originally $5,000. So that's what I want to take them off my books for. And then the second piece showing that I need to actually remove it from my inventory worth $5,000. Now the next piece is our return. Note that the seller didn't have anything to do with the shipping, so I can ignore the June 11th. I'm ready now for June 12th, looking at the return of the items that I sold. And it's going to be almost identical to what you see up here on June 10th. It's just everything's going to be flipped. So instead of having sales revenue, I'm now going to have a sales return. And it tells me back up here, the sales return was for $350. And it originally cost me on my books $80. So that's at least the value of it coming back. So $350 is what we got, a sales return. So I need to take that off of my customer's bill for $350. And then also on the 12th, then I got to reverse this guy here showing that I sold the stuff. So now I'm actually getting it back in my store. So I need to put it back on for what it told me in the problem, which was $80. And then take it off of my expense account, the cost of goods sold. That was also $80. And that 80 again came from the initial problem that told me the fair value of those goods coming back was $80. Now on the 19th, the seller is receiving payment. So I asked myself the debit question, what did we get? We got money, cash, and it's going to be the same as it was up here for these guys. It's the same money changing hands. So instead of them paying cash of $74.80, we're getting cash of $74.80. Actually, $78.40. Say it backwards. I'm going to skip down here and do the credit. the cash came from my accounts receivable. So when they pay me, there's a reduction then on what my clients owe me. They owe me $8,000 less, which takes care of their entire account receivable. If you were going through and you took $83.50 as a debit to account receivable, subtracted out the $350, you're left with $8,000 in your account receivable balance. And now when they make payment with the discount, you take off the entire, they don't owe anything anymore. And when you're the seller, we actually call this a sales discount of $160, and that acts as a contra account. So I can submit here, and I should be all done. Okay, that wraps up for exercise 5.4. The next one I will do is exercise 5.18 in the next video.